Hello guys, welcome to this episode with me. So in this episode, I will talk on candlestick patterns and technical analysis, what it's all about. You know, a lot of people want to know what is technical analysis, how to use it, how to apply it in trading the financial markets. You know, they want to understand, but when they go online, search online, there's a lot of information out there. It confused their mind. They couldn't just grab the thing. They were like, this thing is much big, voluminous, and all kind of type of patterns, doji, ama, shadow, that kind of stuff. And they don't know what it is. They are to focus on to make money. So what is technical analysis? So let me show you. Now, personally, I define it as the study of price history data to identify patterns, common patterns, structures, trends that are likely to repeat themselves in the future. So we use the price history data to identify common patterns, common structures, and trends, which then in turn help us to understand the current price movements, patterns that are being formed at the moment, which then also help us to be able to predict the possible future price movement. Hope you get this. It's very easy, very simple. Okay, so technical analysis, help us to understand price movements. It then also help us to be able to predict the possible future price movement. So it is not that complicated. It is not complicated, but people's mind are complex, so they bring complexity into the equation. Okay, but in sincerity, in the basic form, in the purest form, this style of analyzing the market is all about identifying price history. So we are looking for common trend, common structure, and common patterns that have repeat themselves over and over again, which they are likely to repeat themselves again. So in some, you can see that technical analysis helps us to understand humans' behavior in relation to money and assets. What does that mean? It means that uh, technical analysis helps us to understand people's emotions and their reactions to money in the market, money movement in the market, which means that, in real sense, trading is not just done by itself. People go to exchange to buy and sell an asset. Hence, they trade it. They buy it with the money, sell the asset to get their money back. So which means that all we do in tech analysis with which is TA, is that we just study people's relationship with money, how they react to money. Oh, maybe the money is going down. How do they react? Do they panic to sell off? Do they wait? Or maybe the money is increasing now in value, they're not in profit. Do they, panic to sell off to quickly secure their profit, or to just, they're in greedy mood. They're just greedy. They want, okay, more, 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 or just crash again on them. So this stuff analyzing the market help us to understand people's emotions and their relationship with money, or their response to money movement in the markets. So is very simple and basic. When you bring it down to it, is basic form. Okay, so it's not that hard, it's very easy. Now, to in using tech analysis to understand price movement, a Japanese trader many years ago came about with an invention, with a new concept which he call candlesticks. So these candlesticks, each of them, capture details, capture information. Like inside each of them, the information about price movement in that time frame you're looking at are encoded into that candlestick as data. So when you look at it, you have to decode that candlestick data. Looking at its structure, its shape, and formation, you can just decode, oh, do what's happening in the market now. So this makes it easy. So this is how we come about candlestick patterns that we use today as technical analysis. Okay, so it is called that way because it makes use of technical approach to the market instead of just following the news, which people call fundamentals. Rather, you follow some set of data, price movement history by yourself on the chart. Look at your chart to deduct something, to do something to be able to understand the market, and look know what market is saying to you, and act on based on that. Hope this is clear to you, right? So now in technical analysis, we have sorry, in candlesticks, we have different type of candlesticks. If you go online, you see kind of things, you see doji, ama, shadow, one kind of standard, anything like that. All kind of stuffs out there. But but here's the thing: all those things you see online are derivatives of in candlesticks. They are what? Derivatives, which means that people advances them. People based on personal experience with candlesticks, they come up with different definitions on their own and that. But in a basic and purest form, they are just two candlesticks patterns you need to master, to understand, to really make money from the market. When you fully understand these two candlestick patterns, all by yourself, you can invent your own candlestick patterns which work for you. Like you can create all derivatives. So they're just two. So what are those two? One is we call it engulfing candle. Another one is long wick candle. I'm going to show you on the chart the two of them. You will see them, okay, and what they mean. So in the next episode, I'm going to show you that what is a engulfing candle, what is long wick candle, how do you identify them on the charts, and how they use them. Okay, and Also in summary, there are also two color types of candle. We have, though the color is not really the extent, but almost everywhere people use mostly in most places on charts we use green and red for the candles. Red means this is red. You can see color red means it is bearish. It is selling. That means the price is going down. While the green means the price is going up, bullish. Okay, so those are the two colors we use on candlesticks. Now, you can change the color according to your types. When we use white and black, you can come here, you know, change change it. You know, you can change it. So this is simple. You can see. You can change the color here, anything you want to. So it's not really red and green that can be seen everywhere. No, it depends. People use different colors based on their own taste, but in simplest form, okay, when you see red candle, it means price is going down. When you see green candle, it means price is going up. That's what it means in simplest form. But in some advanced chart, you can see it can be tweaked based on the trader choice. Why the green so can mean anything. But what you need to understand in this thing basically is the concepts behind each of these things. Okay, the concept, the understanding behind them. When you see something like this, it means the price is coming down. So no matter the color you see, it's just coming down. Price is coming down. Simple. So the next episode, I'm going to show you what you have to look for in candlesticks, how to identify the right candlesticks pattern you need, and also trading with them. So see you guys in the next episode. And also, if you have any question to ask, you can ask them in the chat box. So I will reply to you. Okay. So see you guys.